Time for a check of markets now, and Tredas' Doug Simon joined me on Thursday morning, and between rallies in corn and soybeans, steady exports overseas, and coronavirus relief payments, there was plenty to discuss. But I began by getting Doug's thoughts on current crop conditions, harvest progress, and early yield reports.
We're about 8% in the U.S. and kind of around 11% expected, and last year we were about 6%, and on average we're about 10%. This time of the year, and Nebraska is about 10% harvested versus 4% last year. So everybody's pretty anxious. Things dried down here, so they feel like, man, we need to get going. But we're really kind of on pace, where we need to be. But it seems like corn's been, drying down probably slower than everybody expected. Soybean side of it, they're 6% harvested. Usually we're about 6% on average. But again, there's a big variation, I think, in how things dried down this year because of the dry conditions. And some of the beans were still pretty green here just a couple weeks ago. And so there was a lot of wetter beans out there. So people are kind of nosing around trying to pick out the dry ones and get them into some of the processors for some early harvest premiums.
Okay, and corn and soybean rally has been in the news too. Kind of gone down a little bit in the last few days, but how big of a rally was that? Kind of put that into context for us as far as past rallies.
Well, pretty substantial. I always talk about commodity markets and you have big rallies, 30%. Recently we've rallied 20% in the beans. We went from a low down in kind of in that 865 area, and we hit 1046 last Friday. About a 20% rally. We've traded back to about 1005 on Thursday morning. The bean side of it, we were down to 320. These lows were kind of formed back in early August, went up to 379. It was about an 18% rally. But you look at that, that's 59 cents on the corn and $1.81 on the beans. And in the old days, if we went from $2 corn to $2.50 back in the 90s and 2000s early on, that was a pretty substantial rally. Last summer we went from $4 level up to $4.74 with all the prevent plant. So when you look at the corn rally we've had, 59 cents is pretty substantial, and you look at the bean rally of $1.81, and given the fact that we spent so much time below $9 during the year, it's pretty big rally.
And with everything that you've said, how aggressive do we need to be with our marketing, our selling strategies, our risk management right now?
We've been looking at the PLC program on the corn, and that's kind of made us drag our feet a little bit because you had a free put from the government. But now that we've rallied back up above that, kind of above that floor, or back to where that floor is in place, I think you have to be more aggressive looking at corn. On the soybean side of it though, we're considerably above like that seasonal average price. If you look at it from back in March, till September, so we're, $10, and you look at the good basis levels we have. You look at, I don't see a reason why you couldn't sell your beans, and if you want to remain bullish and speculate on higher prices, because there's no carry in the bean market. In fact, the March prices are lower than the nearby November. Overnight, they're like 10.05 on the Nov. It's fallen 40 cents, so we've lost some premium there, but the basis levels were still pretty good, and so off the combine for revenues, that's a good selling price. So if you want to remain bullish, there's no carry in the bean market. You sell the beans and you can buy a call. You can do something for 20 cents out there and against out in December. That's against the January futures, and maybe sell something against another month. But there's some strategies you can do there that you can be bullish where you don't have to speculate in the bin.
And one thing we haven't talked about much is the exports, especially to China. Seems like every day you hear news on that. What do you make of all this?
Literally every day there's a sale. Every morning at 8 o'clock you get a private exporter notice from USDA that China or unknown, which is typically China, has bought more beans. And so that's been every day. Now corn's not been quite as frequent, but the bean side, they've probably got about 1 billion bushels on the books. And we're slated to export like 2.1 billion this year. There's wild estimates out there of 20 to 30 million metric tons of corn imports by China. I don't know if those things are ever going to come to fruition, but they have stocks in that country that they've been holding and that are on the world market balance sheet. People have asked me all along here, do we see price rallies in presidential election years? And it didn't look like it until about a month ago.
Okay, that's true.
But the CFat payments and the different payments that we received, those have been forthcoming. So if it hasn't been on the market, it's been from the government transfers.
And yeah, let's get into Cfat, because big news from the USDA late last week regarding that second round of coronavirus relief payments. So this is part two. Just kind of give us a quick reminder about what are we seeing included in this second round?
They're basically going to take your trend adjusted average production history, or APH, numbers that your FSA has, and your crop insurance. It's based on your crop insurance numbers and crop reporting that you do. But it's going to be a trend adjusted, so it's more relevant or more current yield information. But basically, it's going to be 21 cents a bushel on, 23 cents a bushel on corn and 41 cents a bushel on beans. So I just, kind of figured if you had 190 bushel, kind of production numbers, here in the, kind of Cass County or Lancaster County, that, that's going to be, about $13 an acre on beans and probably about 28 acres on the corn side of it.